You've been lied to about RSI. You sell at 70, watch price climb 50% higher and blame yourself. That sinking feeling isn't your fault. The method failed you, not your instinct. Stillness creates clarity. Clarity creates memory. Memory creates discipline. Soon you'll wield RSI like a precision tool for consistent profits. Strategy 3 changed everything for me. By the end, you'll never misread momentum again. Results not guaranteed, education only. Let me tell you about the day I lost $3,000 trusting RSI 70. You know the rule. RSI above 70 means overbought, so sell. RSI below 30 means oversold, so buy. It feels safe. Like finally a map in the chaos, but this belief, it's draining your account. You take a loss, swear you'll learn, then 2 weeks later, same trade, same pain. It's not your fault, it's the method. Where did this rule come from? J. Wells Wilder's 1978 framework. A brilliant mind, but his world was slow. Rotary phones, paper tickets. Back then, markets moved slowly. Now algorithms drive momentum to extremes. You've been handed a relic and told it's gospel. Stillness creates clarity. Clarity creates memory. Memory creates discipline. Discipline creates consistency. Consistency creates success, your edge. But here's what nobody tells you about Wilder's original work. You cling to RSI 70 because it feels like control. A simple line in the sand. Above 70, sell. Below 30, buy. No thinking required. It gives false certainty in a game that punishes certainty. You want the market to be predictable. You want a rule that never fails. But deep down, you know the truth. You see the charts screaming higher while you sit in cash. You take the loss, then watch the trend run without you. Ask yourself, how many times has RSI 70 cost you a winning trade? It's not your fault. The method failed you. Stillness creates clarity. Clarity creates memory. Memory creates discipline. But the myth persists because it's easy. It gives you permission to be lazy with analysis. You ignore the momentum, the volume, the story. That's costly. Discipline over dogma. Your edge awaits. Selling at RSI 70 is like leaving a party right when it gets good. You hear the music, see the crowd, but fear the hangover. So you go home early. Then the real celebration begins without you. Look at any chart. Tesla in 2020, RSI hit 70, then doubled. Bitcoin in 2021, RSI pegged 70 for weeks, then ripped higher. Amazon in 2017, RSI 70, then a 100% rally. You sold, you missed the move. You watch from the sidelines. It happens again and again. There's a reason pros do the opposite of what you've been taught. They buy strength. They ride momentum. They understand that overbought is just another word for strong. You've been conditioned to fear what moves. Stillness creates clarity. Clarity creates memory. Memory creates discipline. Fear kills profits. Discipline wins. The real trap is emotional. You see a trade in profit. You see RSI hit 70. Fear whispers, take the money. Fear of giving back gains hijacks your logic. You exit early. You feel smart for a moment. Then the stock rips another 50%. You're left behind, stuck in regret. That's the cycle: fear, exit, regret, rinse and repeat. That feeling of safety costs you. Every time. Here's what you must understand. RSI is a momentum indicator, not a reversal signal. It shows strength, not exhaustion. Overbought doesn't mean sell. It means the trend is strong. Oversold doesn't mean buy. It means the trend is weak. Stillness creates clarity. Clarity creates memory. Memory creates discipline. Once you shift this mindset, you stop fighting momentum and start riding it. Discipline wins. That's the shift. Momentum is your ally. Fear is your enemy. Imagine missing a 300% move because a number said 70. The stock flashed a warning. You respected it, and then watched it climb for months without you. The pain isn't just the money lost. It's the sickening feeling of being tricked by a tool meant to guide you. You followed the rule, so why did the market punish you? Because a strong trend doesn't weaken when it hits a magic line. It flexes. This is RSI persistence, where the indicator can park above 70 for weeks, not as a warning but as a badge of absolute power. You are trying to short a god. Think of a world-class sprinter. When they hit full stride, their body temperature and exertion are extreme, overbought by any resting standard. Would you expect them to collapse at that exact peak, or sustain that brilliance through the finish line? That elevated state is the point. An overbought RSI in a monster trend is that runner in flow, each stride building on the last. Selling there is betting against the performance of a lifetime based on a thermometer reading. The crowd panics at the heat. Smart money quietly gets into position, buying the dip created by that very panic. Your fear is liquidity for their logic. Stillness creates clarity. Clarity creates memory. Memory creates discipline. You now possess a foundational crack in the conventional wisdom. The number 70 has been drained of its false power. You understand it can signal a sprint, not a stumble. Now that you understand the foundation, let's expose the first secret strategy that institutional traders guard closely. It's not a hidden indicator, but a specific way of visualizing this persistence to reveal entries that look wrong but feel perfectly right. Ready for an edge that turns confusion into conviction. You take a losing trade, then watch price run another 200 pips without you. It's not a lack of effort, it's the method. The default RSI settings are lying to you. Strategy 1. Trend riding. In an uptrend, professionals don't wait for RSI to hit 30. They buy pullbacks into the 40-50 zone. In a downtrend, resistance lives at 50-60, not 70. This single adjustment separates amateurs from professionals. You learn to identify trend direction first. Always. Uptrend means higher highs and higher lows. Then recalibrate your RSI zones accordingly. It's like adjusting your sails to the wind instead of fighting it. Imagine EUR/USD trending up. Price dips, RSI touches 42 right on support. You enter long, stop below the swing low, target the recent high. The numbers are clean, but the real edge is psychological. Here's the catch most traders miss. Your brain will scream at you to take profit early. You'll see a small gain and want to lock it in, but stillness creates clarity. Clarity creates memory. Memory creates discipline. This method forces you to stay in winning trades, to ride 70–80% of the major move instead of exiting at the first twitch. The profit isn't in the entry, it's in the sitting. Strategy 2 solves that timing problem entirely. If trend riding is the foundation, the next strategy is the precision scalpel. It answers the question you're already asking. When do I actually pull the trigger? For now, let this sink in. The market only rewards those who adapt their tools to the conditions, not the other way around. You're no longer following a formula, you're reading the rhythm. You keep getting caught in fakeouts, watching your gains vanish. That's what RSI divergence solves. Patience is the discipline that makes divergence work. Wait for the bar to close before acting. One mistake here can wreck your accuracy, jumping on a developing signal without confirmation. Divergence is a whisper, not a trade order. Combine it with a support or resistance zone, that's where probabilities soar. Memory creates discipline. Discipline creates consistency. Smash like to anchor your commitment. Subscribe for accountability on your journey. Comment trading to lock in mastery of these strategies. Then check the description for 2 free gifts. The 15-step checklist you use before every trade, and a risk management calculator so you never risk too much again. These tools will skyrocket your RSI results and protect your capital. Strategy 3 is the most powerful yet. It binds everything together into a single, repeatable edge that quiets the noise forever. Strategy 3, the RSI 50 crossover. This is the one that changed everything. You've been told to watch 70 and 30, to wait for overbought and oversold signals. But those are traps that leave you chasing ghosts. The real battle unfolds at the 50 line. Forget 70 and 30, 50 is where the real money lives. It's the center of gravity, the point where bulls and bears fight for control. When price crosses above 50, momentum shifts. Below 50, the sellers take over. You take a loss not because you misread a pattern, but because you were looking at the wrong number. That hesitation, that second guessing, gone. Stillness creates clarity. Clarity creates memory. Memory creates discipline. Watch the 50 line and you'll see the market's true intention. No more guessing. Here's the filter that makes this nearly bulletproof. Volume. An RSI cross above 50 with low volume. That's a trap. Wait for a surge in volume. That's true conviction. When volume confirms the move, you step in. This removes the guesswork. You stop trading on hope. You stop entering too early and taking the chop. You felt the sting of a false breakout, that knife twist of a head fake. Volume protects you from that. It's the market proving its hand. Stillness creates clarity. Clarity creates memory. Memory creates discipline. Your brain wants to jump at every cross, but discipline says, wait for volume. No impulsive clicks, no revenge trades. That pause is where successful traders live. Trust the filter, the second guessing dissolves. You know the edge is real, but timing is everything. Miss this window and you lose the edge. Now combine them. Strategy 1 gave you the trend direction. Strategy 2 gave you the entry trigger. This RSI 50 system gives you the momentum filter. Here's the framework. First, confirm the trend on the daily. Then wait for the pattern on the 4-hour. Finally, let the RSI 50 crossover with volume confirm the move. When all three align, you have a trade with institutional-grade conviction. It turns noise into a clear signal. This is the trifecta. The convergence transforms your trading from reactive to proactive. You don't force it, you wait. Stillness creates clarity. Clarity creates memory. Memory creates discipline. Layering these strategies isn't about complexity, it's about stacking probabilities. It's not magic, it's method. You're not guessing anymore. You're executing a plan. Each trade becomes a simple if-then decision. No second guessing, no emotional override. Discipline becomes your default. That's the real shift. Knowing the strategies is one thing, but your mind is what makes or breaks them. You can have the perfect setup and still sabotage it with a moment of doubt or a flash of greed. The system is just a tool. Your psychology is the driver. Stillness creates clarity. Clarity creates memory. Memory creates discipline. Without discipline, every strategy fails. Without stillness, you'll overtrade. You've proven you can learn the method. Now you must master the mind. The next part is where the real work begins. It's not about more indicators. It's not about another secret pattern. It's about the 6 inches between your ears. It's about rewiring your beliefs. It's about becoming the trader who doesn't flinch when the setup appears. Master that and the profits follow. But be warned, this isn't comfortable. Growth demands discomfort. That transformation is possible and it starts now. The best RSI strategy fails without the right mindset. You know the signals, crosses, divergences, but still you hesitate. You take profits too early. You freeze when the chart turns red. It's not your fault. Your brain is wired to lose money. Let me prove it. Fear whispers every dip is a crash. Greed screams to hold longer. Impatience makes you enter before confirmation. These are factory settings, not flaws. Most traders ignore the war inside their skull. They blame the indicator, the market, the news, but the enemy is closer. Until you master this, you're trading blind. Loss aversion is real. The pain of losing twice outweighs the joy. You feel it in your gut. Trading without psychology is driving a Ferrari with the parking brake on. All that power wasted. Stillness creates clarity. Clarity creates memory. Memory creates discipline. The professional doesn't chase every candle. They have a checklist burned into their mind. Trend alignment, divergence confirmation, volume support. Before the trade, they ask, what is my entry trigger? Where is my stop? What tells me I'm wrong? This isn't robotic, it's release. Detachment from any single outcome means you're finally free. You trade the plan, not the emotion. You execute the strategy, not the hope. Hope is a liar in this game. Discipline is the truth. Here's a question that will expose your biggest weakness. When was the last time you entered a trade without a written reason? Think back. That impulsive click. That revenge entry after a loss. Write it down right now. The journal captures these moments. It turns chaos into data. You'll see mistakes repeat. Fear at 70, greed at 30. This insight is your power. Think about the 3 RSI strategies you've learned. The reversal demands patience. You wait for the divergence, not the first touch of 30 or 70. The momentum strategy demands discipline. You silence the panic when price rips through levels. The hidden strategy demands stillness. You let the signal mature without interference. Each is a mental test. Your psychology either fuels the edge or poisons it. You can have the perfect setup, but if fear makes you exit early, you lose. If greed makes you overstay, you lose. The plan is your anchor in the storm. Journal every trade around these strategies. Review the emotion, not just the outcome. You'll see patterns. Maybe you always cut winners short on the reversal, or you freeze on momentum entries. This is the real work. Without this, they fail, always. Even with perfect psychology, a hidden killer destroys accounts overnight. It's not emotion or strategy. It's something silent in every trade. With monk-like discipline, it can still wipe you out. I'll expose it next. But now, remember, trading is a mirror. Every impulsive click shows a crack in your method. Start journaling today for clarity, not profit. Write your fear at RSI 70. Note your greed at 30. The patterns will shock you. Stillness creates clarity. Clarity creates memory. Memory creates discipline. This is how pros win. You can too. That killer is technical, overlooked by most, but you'll learn to spot it soon. For now, master your mind. Review your last 10 trades. Find the emotional flaw. Fix it with the checklist. This is your edge. Emotion is the enemy. Discipline is the weapon. Use it daily. One bad trade can erase 10 good ones. Here's how to stop it. Risk management isn't a limit. It's the hidden multiplier that keeps you alive long enough for your edge to play out. Think of it as the seatbelt. You don't notice it when the road is smooth and the candles are green. You don't praise it when you're cruising. You notice it only in the violent, sudden crash when everything goes wrong. It's the difference between a scare and a fatality. Without it, a single black swan event or a liquidity hunt doesn't just bruise your account, it breaks it. You protect the capital first. The profits come as a natural result of survival. Most traders set stops in the worst possible spot. They place them exactly at the obvious swing low, right below support, where every other retail trader is hiding. They place them where the algos can see them. You felt it. The market dips, tags your stop by a single tick, and then rockets in your intended direction. Rigged? No, predictable. When using an RSI divergence strategy, your stop doesn't belong at the recent low. It belongs beyond it, giving the trade room to breathe. On a hidden divergence, you tuck it behind the structural level that the momentum is confirming. A stop isn't a precision target. It's an insurance policy placed where the trade thesis is mathematically dead. Stop letting the market hunt your panic. Now let's talk about the 1% rule. Not 2%, not 5%. 1% per trade. On a $10,000 account, you're risking $100, that's it. It feels boring, doesn't it? That's the point. You're not here for dopamine, you're here for compounding. When you risk small, you remove the animal brain from the decision. Imagine never losing sleep over a trade again. Because when you know the worst-case loss is $100, a sudden reversal isn't a crisis. It's just a cost of doing business. You can ride the trend-riding strategy without your heart pounding as a candle pulls back. You can let the trade breathe because you're not terrified of losing money you can't afford. You're not trading to get rich this month. You're trading to be solvent next year. Risk to reward is the engine that makes the low win rate work. You need a 1:3 ratio as your floor. Risk $100 to make $300. That's the alchemy. If you're right only 40% of the time with a 1:3 ratio, the math bends heavily in your favor. It changes everything. It means you can take 5 consecutive losses, and one single winner not only wipes the slate clean but puts you in profit. This is how you stop chasing. This is how you accept a loss calmly, knowing it was a mathematically sound bet that didn't work out. You stop being a gambler and become the house. The house doesn't need to win every hand. The house simply needs to have the edge on every bet placed over 1,000 hands. You've tried piecing it together yourself, watching countless videos, switching indicators, chasing setups, and consistency slips through your fingers. You take a painful loss, swear you'll never do it again, then 2 weeks later the same mistake repeats. That's not a discipline problem, it's a process problem. It's not your fault. You were never given the full sequence. Here's your exact step-by-step blueprint. Each morning before the open, start with stillness. Open your charts. Identify the larger structure, trending or ranging. This single question shifts everything. Follow this sequence and trading becomes almost mechanical. No more guessing, no more emotional reactions. Just a calm, repeatable process. This daily rhythm turns scattered knowledge into disciplined action. Print this out. Make it your pre-market ritual. Stillness creates clarity. Clarity creates memory. Memory creates discipline. And discipline creates the consistency you've been chasing. Step 3. Confirm with volume and moving averages. RSI gives you the signal, but volume tells you if the market believes it. A breakout on high volume, that's conviction. A reversal on low volume, suspect. Add the 20-period moving average as a dynamic filter. Above it for longs in an uptrend, below for shorts in a downtrend. These layers stack the odds in your favor. But here's the discipline most people can't maintain. Journaling every single trade. Not just the entry and exit, but the why, the environment, your emotional state. Without journaling, you're rebuilding the puzzle every day with no reference. Write it down. Stillness creates clarity, and journaling is stillness in action. Clarity creates memory. Memory creates discipline. Your journal is your personal playbook. Skip this and you'll repeat the same painful mistakes. Make journaling your non-negotiable edge, your mirror of truth. Step 4. Execute with proper risk management. You know the setup, you've confirmed it. Now define your risk before you click. Never risk more than 1 to 2% per trade. Place your stop based on structure, not a random number. Step 5. Review and refine. At the end of each day, scan your trades against your journal. What worked? What didn't? Adjust one small thing. Want to know what separates the 1% from everyone else? Consistency in this exact routine. Imagine a week. Monday you identify a trend, use RSI pullback, win. Tuesday the market ranges, you pivot to RSI extremes, win. Wednesday no clear setup, you sit out. That's mastery. Not more indicators, not faster execution, just the same sequence day after day. Stillness, diagnosis, confirmation, execution, review. The formula is simple, but doing it daily is the game. The game is played in your mind. Here's where most stumble when starting this blueprint. They go too big too fast, expecting instant mastery. They see a losing day and abandon the process. That's your old wiring speaking. Mastery takes practice and patience. Think in months, not minutes. Start small. Trade one contract, one micro lot, risk minimal capital. Let the routine harden into habit before scaling up. You'll make mistakes, everyone does, but the blueprint catches them. The journal reveals them. The review fixes them. This isn't gambling. It's skill building rep by rep. Stillness creates clarity. Clarity creates memory. Memory creates discipline. You now have everything the pros use. The exact same RSI strategies, the same structure analysis, the same confirmation tools. But there's one final truth you need to hear. It's the one thing that can still break you. I'll share it next. For now, stay disciplined. Trust your process. Remember when you believed RSI 70 always meant sell. Now you know the deeper truth. The 3 strategies we explored will transform your trading forever. Trend writing teaches you to harness momentum for powerful, sustained runs. Divergence mastery uncovers hidden reversals before mainstream traders notice. The RSI 50 crossover confirms momentum shifts with stunning accuracy. These methods aren't just techniques. They're a new way of seeing the market's hidden language. But knowledge without action is worthless. You need the psychology and discipline to execute without hesitation. You've been given a powerful lens to decode market behavior. The gap between knowing and doing traps most traders. Don't let it trap you. The real journey begins right here, with your very next decision. This is your moment to rise above the crowd, take control, and refuse to repeat old mistakes now immediately. You've been handed the map, but only you can walk the path. Trading mastery demands more than indicators. It requires ironclad psychology and airtight risk management. Stillness creates clarity. Clarity creates memory. Memory creates discipline. Without these, no strategy saves you from yourself. The market tests your patience daily. Every loss is a